U.S. stocks, they were back in positive territory Tuesday afternoon, this time with the Nasdaq Composite hitting a fresh 12-year high. At the same time, gains, they were limited. This as investors remained cautious ahead of the Fed's upcoming policy statement. Now, first on the U.S. economic front, we had single-price home sales. They rose 1% for the month of May on a seasonally adjusted basis. Economists, however, expected a gain of 1.5%. Meanwhile, consumer confidence in the U.S., that slipped slightly to a reading of 80.3 in July from an upwardly revised 82.1 in June. At the same time, trading volume was very light today and is likely to remain the same as investors look ahead to the statement from the Federal Reserve's policy setting meeting. Also, the first reading of second quarter gross domestic product, that will be on Wednesday, and the July employment report, that will be released on Friday. The Fed is expected to maintain its accommodative monetary policy, but investors, they will be looking for hints on when the central bank might start cutting back on its monthly bond buying program. And with earnings season in full swing, the Japanese yen falling against the U.S. dollar and European shares rising on an upbeat German consumer confidence report, it looked to be quite the active finish for the Dow Jones this session. Speaking of which, taking a look now to see how the Dow Jones has finished, a slight bit on the downside, 1.38 points to settle in relatively unchanged, 15,520.59. In a breakdown of today's major market movers, we first begin with Facebook, which advanced more than 6% intraday. This after the company announced the launch of Facebook Mobile Games Publishing, which is a pilot program to help small and medium-sized developers take their mobile games global. At the same time, on the earnings front, Pfizer, gaining after the U.S. largest drug maker, posted numbers that were slightly ahead of expectations. BP posted earnings that missed analyst expectations, but warned that its $20 billion oil spill compensation fund has also almost run out. And JP Morgan ticked higher this after the company said it would pay a total of $410 million to settle allegations of energy market manipulation in California and the Midwest.